Many beginners treat support and resistance like exact lines that causes price to reverse. They draw their lines, wait for price to touch them, commit to a trade, and expect support to make price bounce or resistance to send it down. Then price behaves differently from what they expected. It may move slightly through the line, turn down before reaching it, or react after pushing through the area. After this happens a few times, many beginners start to believe observing support and resistance levels is a waste of time. But there is a better way to read support and resistance. Simply treat them as areas where price may react. Then watch what price actually does when it approaches those areas. In this video, you will learn how to use support and resistance as places to observe behavior instead of areas that tell you when to buy or sell. Support and resistance are often among the first concepts new traders learn, but they are also among the most misunderstood. Many beginners are taught to draw a line, wait for price to touch it, and expect a specific and immediate reaction. But that doesn't always happen. The problem is usually not the level. The problem is how the level is being interpreted. A useful way to think about support and resistance is this: price leaves clues. When price reacts differently whenever it approaches a certain area more than once, that area becomes something worth watching. It shows where buyers or sellers have been getting involved. It does not predict the next move, but it definitely marks a level which traders would be wise to observe. Support is an area where price has previously fallen and found enough buying interest to keep it from going lower. Resistance is an area where sellers are taking their profits, which keeps the price from going any higher. These definitions are simple, but many beginners make the mistake of treating support and resistance as exact prices rather than general areas. They draw a line at one exact place and expect price to react perfectly every time it touches it. But price often moves a little above or below the level before showing its real decision. The key is to watch whether price holds that area, rejects it, or moves through it with strength. Here's the part many traders miss. The line is not the trade. The line is the place where you start paying attention. Suppose price approaches a support area. The trader may think, price is at support, it should bounce. So they buy at that level instead of observing what the price is doing around that area. Is volume increasing? Is momentum beginning to stabilize? Are candles showing buyers stepping in? Does price hold above the area after moving through it? These observations provide information that a line by itself cannot provide. The same process applies to resistance. Observing these things provides you with valuable context. And context is where support and resistance connect directly to the chart whisperer core 4. Support and resistance are part of structure. Structure helps identify where price has previously reacted. Once you find an important support or resistance area, the core 4 helps you understand what price is doing there. Volume shows whether or not more traders are getting involved near the level. Momentum shows whether the move is getting stronger or beginning to slow down. Location shows where price is currently sitting in relation to an important area. Support and resistance will show you where to pay attention, while current price behavior shows you what is happening in that moment. For example, imagine price comes back to a support area from where it has previously bounced. A trader sees the line and buys right away because they expect another bounce. But this time, price pushes below the support area, and it does so with stronger volume. Now imagine price moves into that same support zone, but this time buyers respond. They step in as volume starts to increase and price holds and stays above support. That gives the level a different meaning. Same support area, different behavior, different message. This is why confirmation is so important. It gives you more evidence than a line by itself. Now let's see how beginners can identify meaningful support and resistance levels without cluttering their charts. Look for places where price changed direction decisively, paused repeatedly, or spent time consolidating before moving away. Stay away from marking every single high or low swing, or you will end up creating so many lines that the chart becomes difficult to read. Instead, focus on areas that produced clear reactions. The stronger and more obvious the reaction, the more likely other traders are noticing the same. Also, begin on a higher time frame. Daily and 4-hour timeframes often reveal major structural levels better than lower timeframes. Once those areas are identified, you can move on to your execution timeframe and observe how price behaves as it approaches them. Keep your attention on meaningful structure instead of short-term noise. Support and resistance can also switch roles. When price moves above a resistance area and begins holding there, that old resistance may become new support. When price moves below a support area and struggles to move back above it, that old support may become new resistance. This matters because traders often reevaluate important areas as the price changes. But the rule remains the same. Watch the behavior around the area. First, look at those areas and ask, did price previously react clearly and decisively at this level? Second, determine whether you are treating this area as a zone or a definitive price line. Is price reacting near or around that zone, even if it is not perfect? Third, watch what price is currently doing. Is it respecting that area, rejecting it, breaking through it, or stalling? Fourth, check volume to see if more traders are stepping in or participating near that level. Fifth, check momentum. Is the move gaining strength, slowing down, or losing control? Sixth, go back and check the larger structure to see if that level is showing as an important one on the bigger chart. And always ask, am I observing behavior, or am I making the assumption that the level will hold? Remember, support and resistance point to areas where price has reacted before. Current price behavior tells you whether other traders are paying attention to that area right now. We're not looking for perfectly defined lines. We're looking to understand where market participants have been paying attention and how they are responding right now. When you begin viewing support and resistance this way, charts become easier to read and understand. You stop asking what a level should do and start observing what price is actually doing around that level. That is where real chart reading begins.